So macroeconomically, if you're looking for any good idea with a time horizon of less than 2 or 3 years, even 4 years, you're just a trader. And right. I think, there's something wrong. There's a moral hazard to making 99% of the population traders. Right. The real moral hazard of the government monetary policy is by pegging the interest rates to zero and by yield curve control, they've demonetized the currency, or they've eliminated the currency as a store of value for savers. And that means they've forced retirees, it doesn't matter retirees, it doesn't matter whether you're 20, 30, 40, 50, 60, or 70. They were forced non-financial investment professionals to take risk, forced them to take risk. And then the cruel joke of it all is, in addition to destroying your savings account and destroying sovereign debt as a store of value,
what do you do if you were the CEO of the publicly traded firm with the largest exposure to Bitcoin and you just saw roughly $5 billion of your notional revenues disappear? If you're MicroStrategy's Michael Saylor, you just sit there and keep spreading the word about cryptocurrency. Hello and welcome to Money Talks. In today's video, Bitcoin evangelist and CEO of MicroStrategy Michael Saylor updates about the macroeconomic outlook surrounding Bitcoin and other cryptocurrencies. His thoughts on Bitcoin as the best performing asset as compared to other assets, and why holding Bitcoin is a better deal than trading it. Michael also explains the importance of having a longer time horizon in Bitcoin investment and why the current creative destruction is a good thing. Make sure to stick around to the end of this video where Michael Saylor shares his 2 cents on global recession. So without wasting any more time, let's dive right into this video.
NASDAQ, the index, 19% from that date, up 20%, but the money supply is up 40%. The S&P index up 13% from that date. Bitcoin up 185% from that date. So, and if you picked a broad commodity index, I think the commodity index up double the U.S. home. So you would have beat the money supply slightly with desirable real estate. You would have beat it with commodities. You beat it with Bitcoin, which is like a basically synthetic digital commodity, but it's scarcity.
This month, Saylor gave several TV interviews to reaffirm his unwavering beliefs. In his response to Bitcoin volatility in Bitcoin, he also stated that all wise investors, citing John Bogle and Warren Buffett as examples, are aware that short-term market fluctuations shouldn't be a concern. Any time horizon shorter than 4 years is likely to result in a great deal of frustration and uncertainty, and 10 years is even better. The digital change of money, property, currency, energy, and matter is represented by Bitcoin. He continues, it is currently in the early stage of development and has little knowledge.
I'll give thoughts in three categories: Bitcoin, the macro economy, and then the crypto or micro economy of crypto. And so if I start with Bitcoin, the first observation is I'm not a trader. I think that you need to be a professional proprietary trader to have a short time horizon. So I don't really think anybody should buy it unless you have a 4-year time frame. And I'm hoping that you want to own it forever. I think that Bitcoin is one of those forever assets, like the family farm, or like a trophy. If you bought like the New England Patriots or a soccer team, you want to give it to your heirs. So I have a lot of opinions about the long term, 4 years to 10 years out. I don't have any particular useful advice over the next 4 weeks, and I'm not a technical person. So, and I hear all sorts of things, so we can talk about it, but that's just what I hear in the market. You wouldn't beat it with gold. You wouldn't beat it with NASDAQ stocks. You wouldn't beat it with the S&P index. And so, you could roll the clock forward let's go to, you can roll it to August 10th, 2020. That's the date that my company bought $250 million worth of Bitcoin. And so people knew who I was on that date, and we made a macroeconomic commitment. Now, we've been studying it for 90 days previous, and so we made a commitment based upon the circumstances in the second quarter. But if you look at the macro numbers from August 10th, if we had bet 250 million on Bitcoin, or sorry, 250 million on gold, it would have been down 10%. Gold is down 10% since August 10th, 2010. So gold got a boost in the first part of the crisis, but then it kind of flagged. NASDAQ is like flat, minus 1%, 0%, went nowhere for the entire 18 months. The S&P slightly up 11%. Single family homes up 26%. The money supply up about 20%, maybe 25%, depending on how you count it. So again, single family homes tracking the money supply. Bitcoin, even as it's been thrashed right and left, up 86%. So if your time horizon is less than a year, you're a trader. Even if it's less than 2 years, you're sort of a trader. And if you're a trader, you can be right or wrong about anything in that 18-month time frame. You know, you could have said you're an idiot not to buy Amazon stock when it was whatever, and you're an idiot not to have sold it after it doubled, and you're an idiot not to have, right? You can just drive yourself crazy if you're a trader. And so that's why I don't join with the traders. I just don't know it. I think you need to have proprietary expertise of some sort. But what I can say is if you're an investor, you kind of got to have a 4-year time horizon or longer. And if you're a saver, you're a 10-year time horizon or longer.
Saylor gives off every indication that Bitcoin will be able to weather the storm, at least for the near future. First off, he is shielded from any shareholder reaction since, while holding only 20% of the voting stock of MicroStrategy, he controls 68% of the votes. His business won't likely experience any short-term financial hardship either. The $21,000 threshold at which MicroStrategy is required to put up additional Bitcoin as collateral to support a secured loan taken out this year was breached by Bitcoin last week.
If you assume that the market still controls the long end of the yield curve, right, then the fact that 2-year money is more expensive than 30-year money suggests that the market expects a recession, and they also expect that they're never going to get to that target interest rate. They're going to lower the interest rates.
In 23, I would presume then at that point, right?
Well, I mean, we just live in a time of unprecedented government intervention and everything. And their monetary intervention is more frequent and more extreme everywhere, probably than ever before. And the combination of low interest rates, which have kind of demonetized the sovereign debt, and then the excessive intervention means that the free market scrambling to monetize something else. We're monetizing Rolex watches and luxury cars, and we're monetizing investment properties, and we monetize meme stocks, and we monetized random crypto, assets and the like. And the problem with having 100 forms of money or 1,000 forms of money is this cross barter problem, right? Like, do you really want to pay for your milkshake with Shibcoin, right? Or with your investment property on the lake or something? Not really. It's very inefficient.
A prolonged crypto slump, however, would be a problem. The price of Bitcoin still needs to rebound by nearly 50% just for Saylor's giant bet to break even. There is still time for another dramatic chapter in MicroStrategy's volatile history, whichever way things turn out.
If your time horizon is 10 years, then you can take a deep breath and you can ask yourself the question, when the sound and fury passes, and when we move on to the other side, what do you want to own? And we're back to the observation. You probably want to own digital monopolies, like companies that have more power than governments. a Google or an Apple, right, probably has more power than 175 governments in the world. They will probably outlast the currencies of all those governments, right? I mean, and they have pricing power and they have massive leverage. And if I gave you $500 billion and I said, replace Apple, build your own Apple, your own iOS, right? You probably couldn't do it for probably for $1 trillion. If I gave you $1 trillion in cash in today's terms and said, replace Apple's franchise, it's not clear that you could rebuild that tech stack. And likewise, if I stacked a huge amount of money and said, replace Google, it's just not clear. Can you replace Google and YouTube and the network effect with 500 billion? Now, so there are certain things you want to own through turbulent times, monopolies, right? I mean, it turns out, right, that John D. Rockefeller went into the Great Depression and all those oil companies came out the other end of the Great Depression. And they're still pretty powerful companies 100 years later, right? If you have an energy monopoly or the like. So I think if you're owning digital monopolies that provide the basic elements of the 21st century, and they're companies, they're kind of transnationals, right? They will find a way to raise their prices, and or at the end of the day, you remember when I think Australia had an issue with Facebook and Facebook said, okay, we're just shutting down in Australia, right? That they will literally have negotiating leverage against an entire country.
So do you agree with Michael Saylor that digital monopolies always find a way to increase their prices? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video, and thanks so much for watching.